A few days ago, Donald Trump secured a second term over Kamala Harris.
Donald Trump will become the 47th President of the United States. I want to thank the American people for the extraordinary honor of being elected your 47th President.
And I want to talk to you today about how it may impact the market. When I first started, I didn't understand the impact of macro and micro forces, monetary policy, election, taxes, deregulation, and how those would impact indices, gold, and individual stocks. I felt like I was drinking from a water hole, so I ignored a lot of that and focused primarily on technical analysis. I learned that I could improve my positive expectancy, my EV. I can have more edge if I started to understand how both the macro and micro intraday catalysts could affect my decisions on a day-to-day. So I'm going to start to make a little more of these videos that are timely, especially when we have big things like an election happening. As we get started, I want to read a quote from a veteran in the industry. He said in a tweet recently, "The market is not a place for you to practice your politics. For example, I think Trump winning is good, therefore I will get long today. Or I think Trump winning is bad, therefore I will short the market today. As traders, we observe price action, trends, and then make good risk to reward trades." I want to emphasize this because our opinions can be expensive. Because we like one candidate or another, we can make decisions based off of that. We're trading based on our opinions of a person. So I'll be trying to reference hard data, historical data, as well as objective facts as much as possible. In my most recent interview in Las Vegas, one of the traders from a proprietary firm, I asked him, what's the difference between them and retail traders? He said they have a heavy emphasis on news trading.
News trading is definitely a very big part of our business.
Once I switched over to trading a catalyst-driven system, I found a whole lot more edge and consistency. So let's dive right into it. So we've seen the market surge after the election victory. We saw NAS 100 surge. We saw the US 30 surge as well, the SPY. And then good news for IWM, the Russell as well, because we saw this surge over 6%, and this is a small cap index. Many of us are building accounts, and this is great news that this one would be rallying because potentially with the Trump administration, that could be a great environment for small cap traders, which I'll talk about in a minute. Bitcoin also rallied and hit all-time highs. Some of the stocks that are related to the crypto companies like Mara and a few others caught a rally as well. So my commentary won't be an endorsement for any candidate or to endorse Trump or show favor for Harris. I'm only going to discuss how Trump's election may impact the market moving forward. And I'm going to contrast it against how, if Harris would have been elected, how that may impact the market. I'm not going to be talking about any social policies, foreign policies, only things that pertain to the market. So the first item is regulation. So with Trump in office, there's going to be a push for deregulation. And the industries that may benefit are the finance industry, energy companies, manufacturing companies. These all may receive a boost when it comes to regulation. We can see that already if we look at the energy sector. We took a look at the ETF yesterday here, big push. It's experiencing a pullback now. If we look at the financial sector, look at JP Morgan, Chase, big push, experiencing a drop now. But this was a huge spike, all-time highs. Look at Goldman Sachs. We'll see something similar, right? Let's talk about the tech sector. If we look at the tech ETF, XLK, if we look at the Qs, we see a massive rally. Now, there's generally a market optimism once the election happens and there's a new president. The lack of certainty goes away. So some of this can be due to that. Also, it was stated that Trump is expected to invest into technology more, artificial intelligence, a lot more funding to go into tech companies. So with the election done, we are seeing a rise in the tech sector, and we can see that with the tech ETF and also NAS 100. Okay, so last thing, with Trump in office, the renewable energy is not going to receive some of the incentives that they would have received under a Harris administration. So if we look at something like the ICLN, this ETF for clean energy, on the announcement of Trump, his election here, we saw a big drop. With Trump, we're looking at more aggressive tax cuts. So if the small caps, those companies are generally more domestic companies, those generally will benefit from lower taxes, promoting more investment back into the company, having more earnings and more expansion and growth, right? Which will be good for us because valuations on small caps will go up, providing more opportunity for us. So right now we're looking at IWM, right? This is the small cap index. This is rising, right? This is pushing. So this is great news. We want to see a rally here. We want to see strong moves on IWM, and we want to have a hot small cap market. Generally, the tax cuts, this will bolster investor sentiment. Institutional investors, hedge funds, the larger trading firms, lower taxes for businesses generally will bolster good faith in the business economy. We can't just talk about all the good and not address the potential bad. Economists stated that Harris would be better when it comes to having a more moderate approach on fiscal policy. And the challenge here is that if the fiscal policy changes are more aggressive, inflation can heat up. If inflation heats up, then we can have higher interest rates, will then be an adverse effect. So even though the public disagreed with the economists, some of the analysts and economists that I read up on, they said that with Harris, her presidency may have a more moderate approach to spending and tax adjustments, which would then be better for tapering inflation. Let's talk about volatility, specifically for small caps, right? So under Trump's administration, we could see, as we're seeing right now with IWM exploding due to potential deregulation and tax cuts. So we could see increased volatility, right, because of those, which is what we want, right? Deregulation and the tax cuts. And as long as borrowing stays low, right, the cost of borrowing for these smaller companies, generally they have less access to capital. As long as the tax cuts come in place and they can be done in a way where yields are low, interest rates are low enough, and the borrowing costs stay low, or even continue to, rate cuts continue to happen, then this will be a good environment for small caps, which will be great for us who trade small caps primarily. So we could see increased volatility for small caps in sectors like the financial sector, as I mentioned, industrials. When with Harris's administration, potentially we would see more stability. She presented potential programs aimed at smaller businesses, but if there's a more stable environment for small caps, then there could be a lot less volatility. Now, as I mentioned, if interest rates are to go higher because of Trump's aggressive fiscal policy, because his fiscal policy will be a lot more aggressive. If inflation heats up, then interest rates may rise, and this generally impacts small caps a lot faster than it will impact the larger cap stocks. So for your SPXs, your NAS 100s, your US 30s, we want to keep in mind what's happening with inflation and how that may impact the overall broader market. So let's talk about tariffs. So there are risks associated with the tariffs, right? So if there are renewed tariffs that could put strain on relationships, especially with China. So some of those that have like a global supply chain, those multinational companies, some of those that are in the larger cap indexes, those can be impacted. So there is a risk there. So under the Harris administration, it was perceived that the reduced tariff threats could benefit the multinational corporations. Okay, so let's talk about crypto. Now, if you trade cryptocurrencies specifically, or if you trade crypto stocks, right, or ETFs, let's take a look at what happened. So with Trump's election, Bitcoin hit an all-time high, okay? We saw it explode, and now it is continuing to rise. So why may this be the case, right? So a few factors. This could be the case because of deregulation. So taking the focus off of regulating cryptocurrencies can cause the rise, right? Also, investors may be looking at it as a hedge for uncertainty when it comes to Trump's expansion, his fiscal policies. Due to the tariffs, then crypto can be used as a place to invest due to the uncertainties. So as I mentioned, there was a focus on regulation, like regulating cryptocurrency, which could have caused it to remain stagnant or even drop if Harris was elected. So let's go back to the chart here. So Bitcoin rises right after the election. Also, we will see crypto stocks like Coinbase, for example, rallying. Here we see a massive rally. We looked at Coin, Mara, MSTR. These are all rallying, right? So stay tuned with Bitcoin. If it continues to be aggressive, then you can look at those stocks. Those stocks will be in play. Let's talk economic growth, which will impact the indices. If you're an indices trader or if you trade individual names, the outlook on the economy impacts how overall institutional investors, how they rotate their money, where they put their money. So whether it goes into stocks or risk assets, or it goes into gold or safe havens. So under Harris's administration, as I mentioned before, the economist said that a Harris administration would maintain balanced policies that would potentially maintain the current trajectory. With Trump, because of the tax cuts, we would see potential stimulus, potential boost in the economy, more money for companies, and more spending. And then here comes a wild card. Elon Musk is a wild card here, right? Where he invested over $100 million into Trump's campaign, and he proposed leading a government efficiency task force aimed at reducing federal spending by $2 trillion. Elon Musk is one of the most successful businessmen of our time, one of the most wealthiest men on the planet, and he has been successful with several companies. So investors may get behind this administration because of his involvement, but he's mentioned that there potentially may be temporary hardship that we would trade for longer-term prosperity. Another good thing with having Elon on board is that his leadership in regards to electric vehicles, space exploration, innovations in tech could boost the economy. But again, I have to mention the tariffs, some of the deregulation could cause an impact to the broader economy. So we'll see. Now, specifically, if we look at Tesla skyrocketed with the election, massive boost there, as well as even today, we saw a strong rally. Since the close on Tuesday, we see 18% growth since the close on Tuesday with Tesla. Now, here's the final message to you guys. I see the optimism, I see the market rallying, but let's look at some of the hard numbers, the hard data right now, and let me propose some things that we should be thinking about. So we see the SPX is rising and creating all-time highs, and there is an initial optimism here, right? And we are entering into a general time where we will be rallying seasonally, right? So just around this time, generally around November, December, we start to have what is normally referred to as the Santa rally, right? But let me add some things that we may be cautious about and we may want to consider. So let's look at the overall environment for 2016. So Trump 2016, and then Trump 2024. So 2016 SPX was trading at 18 to 19 times its earnings. That was a relatively reasonable number based on historical standards. Right now, SPX is at 22. This is fairly high. So this ratio here, this PE ratio, suggests that stocks are more expensive relative to their valuation right now, right? So Trump is getting elected where stocks are more expensive this time around. 2016, the 10-year yield was below 2%. Now it is 4.4%. Shout out to Vital Knowledge for the stats, right? So the higher interest rates being in this environment can cause upside pressure on stocks. Even though we see the optimism now, we may see a pullback coming. In 2016, the corporate tax was 35%. And then the Tax Cuts and Jobs Act was enacted, put into legislation during the Trump administration, and now it is at 21%. This reduces the amount of taxes that can be cut. It's already low. Now, the debt to GDP ratio was about 75% here in 2016. Now it is currently 125%. This number means that our debt currently exceeds our economic output, okay? So this will make it challenging to manage the debt as well as limit the flexibility in the fiscal policy, like the changes that can be made, right? It has to be done very carefully. And that's why some may speak of initial hardship when they talked about the government efficiency task force, right? And limiting federal spending. So I'm going to be following tax cuts, regulation. I'm going to be following the policies that are put in place. So I want to see the impact on interest rates. The Fed today just cut by 25 basis points, okay? So we want to see if that trajectory continues, disinflation, and if the current outlook on interest rates continues to help minimize the cost of borrowing money. So if we look at SPX, we see the rally, or we're creating all-time highs, but the headwinds that I talked about, the challenges with SPX continuing to rise beyond the optimism that we currently see, we can see a pullback happen, right? And if we see a pullback happen, we won't look at it like it's a market crash. We just have to acknowledge the high evaluations and some of the other issues that we may be facing, right? So if we look at Trump's election, before we may have had a rally, but there are real factors that may act as a ceiling for now. So we can see a drop on SPX, and then if we do, maybe it will create a rally. We get that Santa rally. I'm not sure what's going to happen. So we'll keep the macro in mind, but day to day, we will make our decisions based off of intraday catalysts and price action. So if you enjoyed this video, please like and subscribe and share with others. If you want to see a video of me in Vegas interviewing some of the top traders at Traders for a Cause, watch this video.